Hey everyone, it's Tony Janko, Mr. Hendricks County with the Janko Realty Group. If you've been thinking about buying a home, but you're not quite sure how the process works, this video is for you. Over the years, we've helped hundreds of families right here in Hendricks County in central Indiana buy homes, and we've noticed the same questions coming up again and again. So today, I'm walking you through the top 10 questions buyers ask us most often. Things like when you'll pay your down payment, what happens during inspections, what an appraisal really is, and when your first mortgage payment will be due. We'll go through them in the same order they happen during a real estate transaction, so by the end of this video, you'll have a clear picture on what to expect from start to finish when buying a home. All right, let's get started. The first question we always get, and probably the one that's on everyone's mind, is how much money will I need before closing? Now, most people are surprised to find out that there are actually only a few out-of-pocket expenses you'll pay before closing day. You'll pay for your inspection, which usually runs between $400 and $600, depending on the size of the home. You'll also pay for the appraisal, which your lender orders once you're through inspections, and that typically runs around $700. And then there's the earnest money deposit, which I'll explain a little bit more in detail later, but it's usually about 1% of the purchase price of the home and gets applied towards your down payment or your closing costs later on. Other than those three items, the inspection, appraisal, and earnest money, everything else is paid at closing. That includes your agent's fees, your lender fees, your title costs, your property taxes, and your homeowner's insurance. So up front, your out-of-pocket expenses are actually much more manageable than people might think. The next question we get all the time is, how will I know what my monthly payment will be? This one starts as soon as you're pre-approved. Your lender will give you what's called a loan estimate. That's a breakdown of your projected monthly payment based on your loan amount, your interest rate, property taxes, and insurance. If your home happens to have an HOA, that may be included as well. Now later, right before closing, you'll receive what's called your closing disclosure. That document shows your exact payment amount, your interest rate, and your final closing cost numbers to the penny. That way there are no surprises at closing and you know exactly what you're getting into. And that leads us to our next big question: when do I pay my down payment and closing costs? A lot of buyers think they pay the down payment as soon as their offer is accepted, but that's not true. Your down payment and your closing costs are both due on closing day. A few days before closing, your lender will send over your final closing disclosure showing the exact amount you're going to need to bring. Just before closing, you'll either wire those funds or bring a certified cashier's check. You'll never use a personal check for this, and we always double check the wiring instructions to keep your money safe. So the short answer, you don't need your full down payment until closing day. Another question that comes up early in the process is what appliances or other items actually come with the home. This one's important because nothing in real estate should ever be assumed. If it's not written into the purchase agreement, it's not officially included, period. Now, in most cases, all of the kitchen appliances like the stove, dishwasher, and the built-in microwave are all included in the sale. The refrigerator, washer, and dryer are sometimes included too, but not always. Every seller is different, and sometimes they want to take those items with them. That's why we make sure that any appliances or personal property you expect to stay are clearly listed in writing on the purchase agreement. It avoids any confusion later and ensures everyone's on the same page before closing. So the takeaway here is simple: never assume. If you want it to stay, we'll make sure it's on paper. Next up, let's talk about that earnest money. Earnest money is your good faith deposit showing the seller that you're serious about buying their home. Typically, it's around 1% of the purchase price of the home and is due shortly after your offer is accepted. That money goes into an escrow account where it's safely held until closing, and then it's applied directly to your down payment or closing costs. There are several ways to pay earnest money these days. Some buyers still prefer to write a physical check, while others send a wire transfer directly to the title company or even complete the deposit through a secure digital transfer app from the title company. If for some reason a transaction doesn't go through, and it's for a valid reason outlined in the contract, like inspections or financing issues, that earnest money is typically refunded to you. It's one of the first financial steps in the buying process, and it shows the seller that you're committed to moving forward. After that, the next major step that we take is scheduling your home inspection. Once your offer is accepted, the clock starts ticking on your inspection period, and you usually have around 7 to 10 days to get everything done. A licensed inspector will go through the property from top to bottom, checking the roof, foundation, attic, crawl space, the HVAC, plumbing, and electrical systems. They're looking for safety issues or structural concerns, not small cosmetic things like nail pops or scuffed paint. Depending on the home, you might also choose to do extra inspections like a radon test, a well and septic inspection, or even a sewer scope if the home has older plumbing. The goal here is to make sure you know exactly what you're buying before you move forward. Which brings us to the next question. What kind of repairs are usually requested after the inspection? After we get the inspection report back, we'll go through it together and decide what's reasonable to ask for. Typically, we focus on repairs that involve health, safety, or major mechanical systems. Things like an active roof leak, a furnace that's not working, a plumbing leak, or an electrical hazard. We usually don't ask for cosmetic issues like worn carpet or minor drywall dings. Our goal is to protect your investment while also keeping the deal moving forward in accordance to the terms of the purchase agreement. Around the time inspections are being completed, your lender will order the appraisal. Now, the appraisal is not the same thing as an inspection. The appraiser's job is to determine the fair market value of the home, basically making sure the home is worth what you're willing to pay for it. They'll compare your home to other recent sales in the area to justify the price to the lender. If the home appraises at or above your purchase price, perfect, we're good to go. If it comes in low, we'll talk about options. That could mean renegotiating with the seller, adjusting your down payment, or even challenging the appraisal with better comparable sales. It's a key part to the process because your lender can only finance the appraised value, not whatever price you offered. Next up, let's talk about when your first mortgage payment will be due. This one usually surprises people. Your first payment usually isn't due until at least 1 full month after you close. Sometimes it's closer to 45 or 50 days later. For example, if you close on March 10th, your first payment probably wouldn't be due until May 1st. That's because mortgage payments are paid in arrears, meaning your May payment covers the month of April. So that gap gives you a little bit of breathing room to get moved in and settled in before your first payment hits. And finally, right before closing, we'll do your final walkthrough. This usually happens within 24 hours of closing, and it's your last chance to see the home before you sign the papers. We'll make sure everything is in the same condition as when you made your offer, and that any agreed upon repairs are completed, and that there are no new issues. We'll check that the appliances are working, the utilities are still on, and the home is ready for possession. Once everything looks good, it's off to the closing table. And then, congratulations, you're officially a homeowner. Thinking about relocating to the Indianapolis area? Well, I've got just a thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research, and I've linked it below. From top employers to the best hospitals and a boatload of other things that you need to know before making the move. The best part is this guide is 100% free. That's right, you heard me, 100% free. Just click the link in the description below or the top pinned comments. Hope that helps. And those are the top 10 questions we get from buyers all the time. Now, this isn't meant to be a full step-by-step guide to the home buying process. There are a lot of additional steps and details along the way. The good news is you don't have to keep track of all that on your own. My partner Tony Eads and I will walk you through each stage, keeping you informed and making sure you understand exactly what's happening from the moment you make an offer all the way to the closing table. Hopefully this video helps answer some of your bigger questions that you might have about how things work and when certain payments or inspections take place. If you found this video helpful, go ahead and give us a thumbs up, subscribe to this channel, and drop any questions you may still have in the comments below. As always, you can visit MrHendricksCounty.com to start your home search, learn more about the process, or connect directly with us. I'm Tony Janko with the Janko Realty Group, helping you find the right place to call home right here in Hendricks County. Thanks for watching, and I'll see you in the next video.